Hey guys, Danny Ray from LifeTelesalesMentor.com. We're going to try and see if I can get a sale or live over the phone. Obviously, it will be edited, but again, this is something you can see live and in action. All right, so stay tuned.
Who
Yeah,
is this?
Danny Ray at Pinnacle Quote Life Insurance Specialist. How are you, sir?
Good.
Excellent. I was giving you a call in reference to an inquiry that you made online at one of our websites, bestliferates.org, and your expressed interest in life insurance.
No, I'm good actually.
Well, you did. Well, you went on our website, right? Did you inquire about life insurance?
No, I went with someone else.
Well,
I'm
you,
all set on that.
well, you're probably overpaying. Do you know who I am?
Uh, no.
My name is Danny Ray. I'm licensed in 49 states and over 50 insurance companies. Okay, I'm one of the top agents in the entire country. I can tell you right now, you're probably overpaying. Okay, what I can do for you is and see if you're not. Okay, it takes about literally 3 or 4 minutes, and I'll know exactly whether you're overpaying or not. All right, you don't like to overpay for things, right?
No, actually. Yeah, okay, go ahead.
All right. So first and foremost, I just got to let you know I'm the licensed agent in the state of Massachusetts. They make me say that, but I'm also your personal agent. So again, what I'm going to do for you is I will find you the best price policy in the industry, just what I do for a living, and it will be with an A-rated carrier better. So if you have any questions, please feel free to jump in. All right. I do see you inquiring about $100,000 in coverage, and you're looking at a GUL, something permanent, correct?
The whole life insurance.
You're looking for whole life. Okay.
Hmm.
Now, you concerned about it? You want cash value, or are you looking for something that you want a guaranteed death benefit when that day comes? Very big difference in price.
Yeah, the cash value.
You want cash value. Okay, I could definitely assist you with that. Now you're looking for something that it's a paid up additions policy?
What is it?
Paid up additions, infinite banking?
No.
Okay, well, that's you want cash value, right? You want a cash value accumulation, correct?
Yeah, correct.
All right, so you want a participating whole life company that's going to give you paid up additions so that cash value can accelerate.
Grow.
Yes. Okay.
Yeah.
So
Yes. Yes.
what you're looking for, it's called an infinite banking concept. It's paid up additions. Okay. What happens
Hmm.
is that you get a dividend from the insurance company and you get interest on the
Yeah.
cash value at the same time. Okay. So that's
Yeah.
exactly what we're looking for. All right. So
Yeah.
real simple now. Okay. And you're looking for about $100,000 on that, correct?
Yeah.
All right. So basically, first and foremost, okay, it seems very doable. What I'm going to do for you, most important thing is figuring out your rate class. Rate class determines your price. Okay.
Hmm.
Um,
Yeah.
do you have a budget? Again, a paid up edition whole life policy is basically you pay far and above the premium payment to get that accelerated death benefit, and it's also an accelerated
Hmm.
cash value. Do you have a
Yeah.
budget that you're looking at for this? What's your maximum that you want to put into this a month as far as a premium payment? 'Cause that's going to affect the cash value.
Uh, Around 230.
About 230 bucks? Okay. All right, so this at least give me some sort of a general idea so I can present to you what's best for you, okay? All right, so what we're going to do is this. I'm going to spay you a sales pitch. I'm really a no-nonsense kind of guy, get right to the point. What I'm going to do for you is I'm going to ask you a few questions in reference to health and lifestyle. Again, what that does for me gives
Hmm.
me the abilities to really separate the fakers from the makers, really isolate that one carrier that will give you that best rate. Once we determine
Yeah.
who that is, most importantly, the lowest rate, then I can go ahead and figure out exactly what the best product is for you. You're a young guy, okay? So there's a very good possibility you won't even have to take an exam, okay, if you're healthy,
Yeah.
okay? So
Hmm.
let's see what you qualify for. Just basic yes or no answers. If there's an yes answer, we'll elaborate, move on to the next. This take literally 2 minutes, if not sooner, okay?
Yeah.
Do you currently smoke cigarettes?
No.
Okay, any other tobacco products, cigars, pipes, chews, or gum?
No.
Any marijuana used last 10 years, medically or recreationally?
No.
Now, what's your current height and weight?
138. 58.
5'8", 130, a great shape. And have you lost more than 10 pounds in the last 12 months?
No.
Okay, ever treated for high blood pressure?
No.
Elevated cholesterol?
No.
Any heart problems, irregularities, or chest pain?
No.
Stroke, mini stroke, or blood clots?
No.
Diabetes, elevated sugar?
No.
Any form of cancer or tumors in your lifetime?
No.
Okay, any form of asthma or any kind of respiratory ailment?
No.
Has a doctor ever recommended a sleep study?
What is it?
Has a doctor ever recommended a sleep study?
Which study?
Yeah, like for sleep apnea.
No, no, no,
Okay, good, good, good. Okay, and ever treated for anxiety, depression, and nervous disorder?
no,
Alcohol, drug abuse?
no,
Okay, last 5 years, have you had any lab test abnormalities with your liver or kidneys or elevated PSA?
no,
Okay, you currently taking any medications or any treatments you haven't told me about?
no,
All right, health wise, you're doing fantastic. Family history, they do look at that. Before the age of 65, so 64 or younger, did any of your parents or brothers and sisters have incidences of or die from heart disease, cancer, stroke, brain aneurysm, or diabetes? Just those five.
no,
Excellent, excellent. And driving history, they do look at that. Any moving violation citations last 5 years, like speeding tickets, blowing stop signs, suspensions, anything like that?
no,
Okay.
no,
Reckless driving or DUIs ever?
no,
Do you own a plane? You have a pilot's license?
no,
Okay. Any scuba diving or hazardous sports the last 3 years, or do you intend to start?
no,
Okay, great.
no.
And where were you born? India?
Yeah,
Okay. And next 2 years, do you have any intentions to live or travel outside the U.S. or Canada?
no,
Okay. And any active duty in the military or the reserves or consulting them?
no,
Any life or health insurance ever restricted, rated, canceled, postponed, or declined?
no,
Anything currently pending in underwriting right now with any other carrier?
no,
All right, last three questions. You're doing great. Ever declare bankruptcy?
no,
Ever been convicted of a misdemeanor or a felony other than a traffic violation?
no.
All right, thank you so much for sharing this information. Now I can accurately pinpoint the carrier that will give you the best rate. All right, so bottom line is this: Forrester's Financial Group, they are going to be giving you the best available price for this. They have the most aggressive paid up additions whole life policy. Okay, I do have to run a illustration, but you do qualify for preferred best. Now,
Mhm.
now, do you want me to give you the price with the non-medical versus the fully underwritten policy, or you just want to go for the non-medical?
What is it? I
Well, there's
don't.
there's two ways to go here. I mean, you're a healthy guy, so I mean, if you go
Yeah.
non-medical whole life policy, you don't have to take a medical. Price is going to be a little bit higher. Okay, but a fully underwritten policy where a nurse comes out to you, just takes height, weight, blood pressure check, small blood and urine sample, price might be a little better. Again, the more you pay, the less that is taken away from that cash value build. Okay, so
Mhm.
if you're really healthy and you're okay to take an exam, I highly recommend to do that because it's gonna make your cash flow grow even more.
Yeah.
Okay.
Oh,
All
yeah.
right. So you're
Sure.
okay. All right. So you're good to take a medical. Okay. All right.
Uh-huh.
Just bear with me here because, again, you're going to qualify for preferred best. I don't see anything here that's going to give you otherwise. All right. And again, you want to be looking at table ring and get a preferred. Just bear with me because I'm actually doing the illustration and I'm going to email you this too. Okay. Now the choice is here, plan type. Now you can make payments on it for the rest of your life. Okay, or you can choose a advantage pay for 20 years, meaning that after 20 years you don't ever have to make a payment again, and the cash value pays for itself. Do you want something that's going to be in 20 years from
Yeah.
now?
Can you do both ways?
Yeah,
Both
yeah,
ways.
absolutely.
That way I can compare.
Yes, yes, 20 again. The shorter the term, the shorter you go, you're overpaying, but again, it's maximizing that paid up additions policy, okay? So,
Yeah.
and would you prefer paying monthly or annually? What do you prefer?
Monthly.
Monthly, okay. And just bear with me because again, I'm going through this illustration for you. And we're going to make sure that we keep it underneath the mech, okay? Now, you have a blend, a case design. Let me explain to you what that means. Okay, if you want to have your main goal right here is to maximize the cash value. I mean, you want it to explode, right? You want it to compound, grow and grow and grow. All right, but we want to
Yeah.
make sure that we keep it under the mech. Okay, mech is where you don't want to go above. Okay, because you don't want it to endowment, because then you're going to pay taxes on your withdrawals. You don't want to do that. You want something that's going to
Yeah.
be able to you're going to be able to borrow from. Okay, tax free and let it still grow.
Hmm.
Okay. All right. Just want to make
Yeah.
sure. So we'll do a permanent fully paid up additions, non-mech. Okay. Not really concerned much about the face value because again, we're looking at more of a um, a face amount solve. Okay. So we're going to actually place in there the premium that you're comfortable with. So we're going to say about 230 to 250. Okay. That's your comfort zone. All right. So
And
yeah, good.
does it come with the premium waiver?
Premium wave, yes,
I
we could
mean,
add those. You know, again, all these little things. You always got to look into. Okay, keep in mind,
mhm.
you can do the. I'm gonna save you some money just by. I'm glad you asked me that question. Whenever you add on a premium waiver rider, it's going to cost you money. Whenever it costs you money, it's coming out of
Yeah.
your cash value. So let me just explain to you how you do this. Instead of doing that, Then what you do what's called an automated payment loan. What that is as the cash value grows, if you miss a payment, you can go ahead and it comes out of your cash value. So there's two ways you're going to go about doing it. You can either pay for the rider, which is going to cost more money, okay, or you can do an automatic payment loan where it costs you zero, and if that day ever comes where you know going to miss a payment, it'll come out of your cash value. All right, so I'll give you the price on both. Okay, you're a
Mm-hmm.
healthy guy, so it doesn't sound like you'll have any issues making the payment and everything else. But we'll make sure the mech
Yeah.
is in order, specified premium. All right. Again, we're going to go ahead and put it up against the face amount. So we're going to do fully paid up additions, non-mech face amount solve. Okay, based off $250 a month. Okay, we'll start off there and then we'll work from there. Okay, and again, this is a 20-year pay, meaning that after 20 years, just to give you an idea, at the 20-year mark, okay, you will have cash value of just under $90,000, cumulative outlay of $68,000 in premium payments. Okay, so you're gonna have $88,000 in cash value. On the 21st year, you don't ever have to make a payment again. So just to give you an idea, 30 years from now, you're gonna be looking at $138,000 in cash value in that policy. Again, cash outlay is $68,000. This is tax free. Okay, so that's based off 250,000. Okay, and again, your death benefit rises too, with the cash value too. Okay, so you have choices. Again, the paid up additions, we got that. It also comes with a critical, chronicle, and a terminal illness rider. You know what that is?
Yeah.
It's a living benefits. Yes. So if you ever get sick, you have access to obviously the cash value, but also you can cash out the policy with the face amount too. Okay, up to 75% of the cash value. Okay, now here are the riders that you can add on to this. Okay, let me see here. Okay, you can do waiver of premium. Okay, if I put that in there,
Yeah.
like right now, just to give you an idea. Okay, based off this right now, with the paid up additions, it's saying 280 for the system is spitting out 284. Okay, we can adjust that. Okay, again, I just want to give you round numbers right now before we make any adjustments. The waiver of premium, you have a choice. Okay, you can go ahead and terminate after 17 years, where we can do maybe 2 years of waiver of premium. Okay, so let's just say two. Let's see what that'll probably do to the price. I always like to do worst case scenario. Okay, um, not that bad. Okay, premium for the rider is gonna be $50 a month. Okay, for that rider. Okay, so it does add to that cash value. All right. Without it, okay, again, with that rider, it's gonna increase the premium by $50 a month. So it goes up to 334 based off 284. Okay, again, we can make adjustments, but that rider is going to cost you $50 a month, $600 a year. That extra $600 a year goes into your paid up additions account. Okay, so that again, you're compounding that over decades. That $600 turns out to be thousands, tens of thousands of dollars that you're going to have in excess. So my advice to you: take the automatic payment loan. Where if you ever come across the point where you can't make payments, remember it's a 20-year pay. After 20 years, you don't have to make a payment again. But the first 20 years, if you go ahead and run into a situation, the cash value is going to build where the premium come out of that. Okay, so that's the option you want to do. Okay, because that extra $50 a month might mean a lot, Hanish. Might mean a lot over a period of time. Okay, now with that said, let me see here. I'm going to go ahead and save this for you. All right. Yeah, and I'll go ahead and get this over. So again, for what you're looking at here, you're looking at a death benefit of 100,000. Okay, specified premium is 284.29 a month. Okay, I'll go ahead and decrease that for you. Now the thing about the 100,000, okay, and again, you are 70. I'm sorry, 48 years old, right? Just turned
Mhm.
48.
Yeah.
Okay. Now, the thing about this is, okay, for this particular product, the minimal on the Advantage is $100,000. Okay. So with the paid up edition maximized, okay, it looks like the premium is going to stay at 284. So you really got your heart set on 230, right? Are you there, Mr. Patel?
Yeah.
Okay. Yeah. So you have your heart set on 230, right?
Yeah.
Okay. So let me
Mhm.
make some adjustments here for you. Okay. Now, if you did a 100-year pay. Let me see. Now again, the paid up additions for 20 years, they do have. All right, so if you do the paid up additions, okay, if you do an advantage pay to 100, in other words, you pay it the rest of your life. You're going to pay a premium payment the rest of your life. Okay, you go that route. Okay, then you're going to be at 187.95. Then that extra 62 bucks a month. Okay, which will get you to 250. That's that paid up addition premium. Okay,
Mm-hmm.
so that'll keep you well underneath that. You'll be right around the 250 range with the paid up additions. Okay, but again, that's on a 20-year pay. Okay, you're going to be paying that
Yeah.
payment the rest of your life, but the cash value is going to grow too. All right, so I always like to be very transparent with you. Now, at year 20, 20 years from now, retirement age, your cumulative outlay would be 60,000. Your cash value is going to be 81. Okay, so
Mm-hmm.
81,000. Okay, and then year 30, okay, your cash outlay would be $90,000 paid into this policy. You have $156,000 in cash value there. Now you see
And
how, yeah,
what is the death benefit?
the death benefit 30 years from now, you're looking at 236, 188. So it's starting off with 100 grand. Then the death benefit, let's just say 30 years from now, okay, when you're in your 70s, late 70s, at mortality age, your cash value is 156. Okay, total cash outlay is 90 grand. Okay, total death benefit is 236. I mean, so you're way ahead of the game if you die. The return on an, I hate to say an investment, but us guys, we always look at it that way. The total return on an investment, as far as this policy, is about almost 3 to 1. Okay, as far as death benefit, and almost 2 to 1 with cash value. But again, that money's there. You can take that anytime. So.
So which is the insurance company with this?
Forest is Financial. Let me tell you a little bit about them.
Okay.
They've been around since the 1800s. Okay, they're a participating whole life company. They're not a stock company. They're a fraternal company. So that's the company. If you want a whole life policy, you want to be with a participating whole life company. Okay, not a company that's traded on a stock exchange. Okay, this company's all about their member benefits. Okay, so they cater to you, the client. The policyholder is a member of the company. Okay, so with that said, I mean you'll be looking at this kind of cash value. All right, so you'd be looking at with the paid up additions. Okay, you bet 250 bucks a month, 187 for
Yeah.
the premium, $250 a month. Okay, 7-year pay. If you do a 7-year pay, you can have this paid up in 7 years. You're at 5,000 a year. Okay, but it's the
Yeah.
seven
No, no.
years. Yeah, I'm just giving you an
20
option.
years.
Yeah, the 20 years. So you'll be
Can you
okay.
do for 20 years?
Yeah, the
Yeah.
20 years you'll be at 284. Okay.
Okay.
All right. But again,
Yeah.
the cash value is going to accumulate. And again, after 20 years, you don't ever have to worry about making a payment. And that cash value will grow. Looks like here, I'll tell you right now, after 20 years, you're looking at the cash value growing $5,000, $6,000 a year on top of that. So that's just because you have the policy, that cash value is growing at 6 grand a year. So that adds to your return on investment too. All right.
So how much after 30 years
After
in that?
Yeah, after 30 years, you're going to be into it. You're going to have a total death benefit of 192, total cash value of 138, total premium payment into the policy is 68,000. But again, that changes at year 20. So year 20 after that, you don't ever have to make a premium payment again.
Yeah.
You know.
But what was the other thing that you were saying? 230. That's benefit.
Oh yeah, that's
230,000.
yeah. If you do the advantage pay to 100, now again, that's paying you premiums every month for the rest of your life.
Oh, okay.
Yeah, then again, yeah, again, that extra premium payments paid into it is growing too over a period of time. So that's going to affect the death benefit being higher, and also and that. But I will tell you this: you do have a maximum. Okay, in other words, you can pay into this policy. I do believe on a good month you can go ahead and pay it up to $400-500 a month, staying under that mech. So your minimal premium payment that you would have to pay on on the 20 year, okay, would
Mhm.
be let me see here. Let me just go ahead and populate this for you. Okay, the minimal payment would be 284 a month on the 20-year pay. But you can pay into this up to about 450 bucks a month and stand at that mech. So if you have a good month one day month and you look at this as a forced savings account, remember whatever
Yeah.
you over allot payment into it, that cash is immediately available to you. So I'll give you an example. If you put 500 bucks into a payment one month, that in excess of that 284 is going to be available via cash value. It's there. It's there. In other words, you can make a payment one day, 2 days later, take that money right back. So
Yeah.
You know what I mean? So that does make a difference too. So if you have a good month and you financially you don't want to put it in the bank where it's only earning you really a point if you're lucky a year, you can go ahead and overlot your payment just as long as it stays under that mech. Okay, which
Can you
is your
send me
down.
both ways, the
Yeah,
20 years one and the
absolutely,
continue to pay,
absolutely. I'll send you
both,
two
both types?
illustrations. Okay, and
With the surrender value,
yes,
like guaranteed surrender value and the non-guaranteed
absolutely. I'll
cash
do
value.
the the non-guarantee and the guaranteed value. Okay, that's you with the two illustrations, right? The one you with the 20-year pay and one with the
Yeah.
the lifetime pay, right?
Mhm.
Okay, and I'll definitely do that for you. Let me see. Your email address is .net, right?
Yeah.
All right, let
Yeah.
me explain to you how the process works moving forward. Okay, obviously you want to pick and choose which one you are, so we're going to put the brakes on this right now because again, I want to make sure you pick the right one for you. Okay, when you which one, whatever the one you pick, the next step is very simple. Okay, really simple. Okay, we do what's called an e-app right over the phone. Okay, I submit the app right to the Foresters via right over the phone. You'll receive an email simultaneously from Foresters to review the application and electronically sign. Okay, then we schedule the
Yeah. And the
parameter.
payment, do they take credit card? Or,
That's no, that's a great question. If you pay annually, okay, credit card, all right, I'll have to double check on this particular product. Okay, I know what you're talking about. You want to make sure you do, you get the points, right? I'm the same way. All right,
hmm
get the 2-3% points. All right, credit
Yeah.
card annually, you might be able to do that. Monthly, every insurance company is going to ask. Any legitimate insurance company is going to ask for a checking account on file, and you pick a due date. Okay, that's just most
Okay.
every insurance, any legitimate, real insurance company is going to do that. But if you want to pay
hmm
annually, you get a little bit
Yeah.
of a price break. Yeah, they do what's called a direct bill. So you pay by credit card, and then they'll go ahead and bill you 11 months from now for another annual payment. But you can change your mode of
Okay.
payment anytime you like. All
Yeah.
right.
Got it.
All right. So yes, let's recap what we do. I'm going to send you over the paid up additions for the Advantage 20-year pay and also for the lifetime pay for the Advantage Plus with Foresters. Okay. Again, I will explain to you the next steps. All right. And at that point in time, process is real simple. You're a very healthy guy, Hanish. So they'll do a strictly and solely they'll do a prescription check. Okay, to see if you take any prescriptions. Again, you're a young guy, so if they don't see anything there, the probably
Yeah.
medical records they probably won't even get. Okay, but be prepared; they might do it because you're over the age of 45. So you do have a doctor you see at least once a year, right? All right,
Yeah.
perfect, perfect. So, all right, so I'm going to go ahead and get these two illustrations over to you. You'll have them literally give me about 5 minutes. It'll be in your inbox and your email. Okay. Also, my contact information. What I'll do is I'll reach out to you. I'll give you the rest of the weekend. If I don't hear from you by Monday, I'll reach out to you Tuesday. Okay.
Yeah.
All right.
Okay.
And
Sounds
what's
good.
a good time for you Tuesday? Just so way I'm not busy. I don't call you when you're busy.
Anytime is fine.
Okay. All right. I'll reach out to you probably late morning. Okay. And again, if you
Yeah.
have any questions, Hannes, just reply to the email. I can answer you within 30 seconds. Okay.
Yeah.
Oh, yeah.
Sounds
Yeah.
good.
You're happy you stayed on the phone with me, right?
Yeah.
All right. Good.
Yeah.
Listen, Mr. Bell, have a great day, great weekend. Again, any questions you have, don't hesitate to give me a buzz. All right.
Yeah.
All
No
right.
problem.
All right,
Thank
buddy.
you.
No problem.
Bye.
Bye. All right, now that's going to be a deal. That's a deal right there. Okay, I can probably post that because it's no important information. Okay, that right there is going to be a deal. Now again, that should have been a term policy. Again, it came across that way. Guy needed a paid up additions policy. Okay, so there's only really one route to go in my eyes. All right, so that was a good call. Okay, so hopefully you went ahead and heard the structure of that pitch a little bit for me. Okay, so that still will be part two. So we'll get that back to you on Tuesday when I wrap this thing up. All right. So that was cool. Okay, bye.